Hey everyone, this is Dan with Data Trend. Today is Monday, March 21st, 2016. It's about 2:25 p.m. Mountain Time. The market's closed a half hour ago or so. We're taking a look at the S&P 500 index, the SPX, and it was a pretty uneventful day out there. In fact, it was really quite dull. The market closed here up 2 points or 0.1% to end the day essentially unchanged at 2051.60. And as you can see here, we had sort of a lower open that just kind of pushed higher, pushed up towards the high from Friday, a little bit above that, and then pulled back ever so slightly at the close. But really, the range was pretty small in here, and there's really not much to get excited about it in either direction. It was just kind of a choppy day on the shorter term time frames. Um, the green and the blue lines that you see right here, the green line indicates the initial expiration break evens for the April 5 SPX CIB that we'll take a look at in a minute. And after we added to the position, they moved up here. So we went on the downside from about 1940 up to about 1960, and from 2040 up to 2060. So the position as it sits right now, we'll take a look at. It is starting to get a tiny bit short delta, just because the trade's getting closer to expiration, and the butterflies and the calls are starting to decay. So we'll take a look at one potential adjustment we might make. And I haven't done anything just yet. And part of the reason that I haven't done anything, even though we're getting a little short delta, is that the market's made this really significant run. And where we sit right now, I'm more concerned about having it pull back a little bit into the trade, and that would be helpful. That would be good. But I think that's a little bit more likely here if we're just going to start drifting higher, and eventually, what we're hoping to see is a little bit of selling come in, and we don't even need a significant down move for it to put us in a good situation. Something down to about 2030 would be nice. 2025, 2020, that would be really good, and we'd have some opportunities to adjust the trade and kind of protect it as well. So we'll take a look at that in just a minute. If we drop down to the 65-minute time frame, we can see here the market just kind of held this level up around 2042, I guess it is. And that was a little bit of support on Friday as well. I mean, nothing major Thursday, Friday. And the market is really just kind of drifting higher at the moment. It's not, moving higher with significant conviction like we had back here last week. It's just kind of a slow drifting chop to the upside, really. And at the same time, we haven't violated any significant levels on the downside. So for the time being, the shorter term bias is still bullish, but there is a potential for a little bit of a correction in here. And it doesn't seem like, today there was certainly not very much conviction out there at all. But if we start breaking a few of these levels, it wouldn't be surprising if we broke through this 2038, 2040 level to see a little bit of a pullback into the 2025 or even deeper, maybe to 2010, something like that. And those correspond to the rising 5-day simple moving average and the rising 10-day simple moving average. So a slight pullback like that wouldn't be any reason for concern or any reason to even question the direction of the primary trend higher for the time being. But let's go ahead and hop over and take a look at the trade. So this is the position as it sits right now. It's made up of two butterflies and two SPY calls. So the lower butterfly is centered at 1930, and then the short strikes are at 1990, and the upper long is at 2050. The second butterfly is actually sort of a split strike butterfly. So it's the lower legs at 1955, and then the 2020 and 2025 strikes are short, with the upper wing at 2085. And then we have the two SPY calls here, the 202.50 and the 205 call. And we did do a reverse Harvey adjustment to this trade early on, and those adjustments are all taken into account by these two options here, so they're included in the picture as well. So the position at the close today, we closed today at 2051.60. The delta is negative 7.8. There's zero gamma. The theta is about $16. The vega is negative 49.67. And the open loss on the trade is about $22. So there's an open loss of $22. And this is kind of the scenario that I was discussing on the daily chart there. You can see here that the position is starting to get a little bit short delta. We have the T plus 0 line diving within the tent. And if we did get a really big fast move up higher to like the 2070 level, something like that, that's 1% higher, the trade would be underwater a little bit. So there is reason potentially to make a slight adjustment here. And one of the little adjustments or the minor adjustments we can make would be to cover up one of these 1990 calls and then roll it up to 1995 or even to 2000. So I put this vertical on here to analyze what would happen essentially if we were to buy back one of the 1990s, and sell the 1995. So we'll go ahead and click that on. And unfortunately, the scale kind of changes here. I'm not sure it's an Analyze tab thing, but you can kind of see what happens. The delta comes down a little bit. We end up back with a little bit of negative gamma, and the theta stays essentially the same, but we're just cutting down the short deltas. If we were to go to 2000 instead, we'll just move this to 2000, we get a bigger credit. The delta comes down considerably. We get a tiny bit more theta, and we just have a more comfortable position if we were to move up here to that 2070 level. This would be looking at an open loss as of today of negative 120 versus if we had done nothing. We'd be looking at an open loss of negative 172. The trade-off obviously comes here on the downside. If we do get one of those pullbacks down into that 2025 level, 2020 that we were talking about, so that's kind of right in here in the position. And excuse me, if we did get a pullback like this, we'd be able to do some sort of an adjustment, do some sort of a reverse Harvey to protect some of this open profit that we pull into the position. And that would be nice. If we got an even deeper pullback, that would be better, certainly. But whether or not that happens, remains to be seen. So if we do make this adjustment and we pull back to that 2025 level, you can see here we give up a significant amount of the open profit that we would have at that level. So what we're trying to do kind of is manage our expectations about where we think the market has the potential to go, given where it has come from, and recognize what is an adjustment that makes sense to protect the upside a little bit here. If we have another push up, 2070 would be taking it up to here, becoming close to breaking up and above this recent high from December. So if the market was to get up there and push up and above there, we'd be taking off the lower butterfly and moving it up as well. But in the meantime, we could certainly make a minor adjustment to the delta just to cushion that move if it was to take place sometime soon. The other thing to keep in mind is that this trade now is getting relatively close to expiration. So we're at 39 days to expiration, and the T+0 line is going to start to rise more rapidly. So it looks like Friday is not a trading day as well, but if we go out to Friday, you can see kind of the T+0 line starts to advance further forward, and we start to dive even more here if we get outside the body of the butterfly. If the market seems like it wants to move a little bit higher with a little bit more conviction, which it doesn't really seem to have at the moment, but if it starts to hold above this 2055 level, it did hold the 2050 level today. If it starts to hold a little bit higher in here, we do have the option to roll up that short put, or we're getting pretty close to the point at which we're going to be making an adjustment, which is going to take place here, in the neighborhood of 2060, 2065. So if the market, let's go back here, if the market gets up and above this 2060, 2065 level and actually holds up there, then we're going to go ahead and close out this lower butterfly and move it up. But for the time being, something that might cushion this move up higher is just rolling up one of those short puts. So we'll see what happens overnight. I believe that somebody from the Fed is speaking around, I think it's 8:30 Eastern time, so there's something to be aware of. And we'll see how it all plays out. But for the time being, the trade's okay. It's a little bit short delta, but nothing's out of control, and the open loss is pretty negligible at this point. So at any rate, that's all I have for tonight. I hope it helps. Have a good night.